right? If you guys were to do everything I mentioned in this course and with the risk management I apply, you can really quit your job and really pass all of these futures prop firms and start stacking, right? So we then have that 15-minute low run out. 930 was manipulation. We then close above this bearish FVG right there. As soon as we close above, we can use the M1 IFVG. Why am I willing to use entries like this, right? This is because we have gone from LTP, ITP, and STP. The questionnaire is confirming the STP, right? Our probabilities are so in our favor that we can start catching these trades here, okay? Then we also get a change in the state of delivery, so we could be long here, okay? Then we get a change in the state of delivery with a close above the bodies of the collection of down close candles that run out the low right there. That could be a long, a bit high up, but and unicorn, right, with the breaker. I prefer the IFVG entry. Okay, equity open distribution. The equity open manipulation can be viewed with two scenarios, okay? Continuation after 8:30 a.m. manipulation. This is meant to say distribution, sorry. Continuation after 8:30 a.m. manipulation. So 8:30 a.m. is a manipulation, 9:30 a.m. is a distribution. A continuation after London session manipulation. So London session manipulates higher, right? And then we have a price swing formed with London's price action. And as we're approaching 9:30 a.m., we're trading back up into a premium, if we're bearish, from London's range high to low, okay? And we're bearish, okay? If we're around there at 9:30, we can expect it to just sell off. Okay, going back to this example. Now remember, this example, I keep bringing it back because we've hit a weekly rejection block, okay? Everything on the LTP is there for a daily bearish candle. We also broke this down on an ITP. So LTP, ITP is aligned for this trade, so we can look at it on the STP, right, for that equity open. Now we need everything on the STP also to align with that questionnaire. Now we've aligned all three time frames, and that's when it's very, very high probability, okay? So we have that 1 hour fair value gap here, if you remember from the previous sessions. Low, broken, high that broke the low, turtle soup, happens at 8:30 a.m. So 8:30 a.m. here was the manipulation, right? We're above the 8:30 a.m. opening price. We anticipate 9:30 a.m. to be straight distribution. And we can use the IFVG in there or a lower time frame in here. Okay, here is an example of the London manipulation to 9:30 a.m. direct distribution. Range high, range low. London manipulates the range high, then gives an expansion swing. Range low and relative equal lows are still present at the time of New York, so there's an obvious draw on liquidity. The market trades up higher into premium from this high to this low, and then equity open is straight distribution, right? And this is the questionnaire that you use for the distribution, right? Are we going to trade New York AM session? If yes, okay, is 9:30 a.m. likely to be manipulation or distribution? If distribution, then are we in a valid market profile for distribution? Notice it's a different questionnaire slightly. The first two questions are the same. Are we in a premium for shorts or discount for longs? If yes, have we run stops prior to 9:30 a.m.? If yes, is there obvious liquidity to target? If yes, did we go above the midnight open and or 8:30 a.m. opening price or below, depending on if you're bullish or bearish? If yes, is there SMT? If yes, is there an entry model? If yes, execute the distribution with zero fear. Okay, let's look at a continuation of 9:30 a.m. after 8:30 a.m. was the manipulation. Okay, so this is that same example, right? First, we profile the market. Are we even going to trade New York AM session? Consolidation in Asia, okay? Move down in London. Is it extremely overly extended? No. So we can trade the 9:30 a.m. Is 9:30 a.m. likely to be manipulation or distribution? In this case, it's likely to be distribution. Why? Because we have run stops prior. Also, it's a valid market profile. So the questionnaire, are we in a valid market profile for distribution? We're accumulating, right? 8:30 a.m. does the manipulation, right? Then we're in distribution. So if the market at 9:30 a.m. was accumulating, okay, at a point of reversal, we can't anticipate that. We need to be in a valid market profile, right? This is going all the way back to episode 1 of the entire course. Remember, I told you this is going to be the first thing we use in the Equity Open. I mentioned that in the first episode. So we need to be in a valid market profile for the market to be distribution. One of those is AMD. Remember the 2 market profiles, right? The sequences. Are we in a premium for shorts or discount for longs? Premium high, discount low? Yes, we are in a premium. Have we run stops prior to 9:30 a.m.? Yes, we have with 8:30 a.m. Is there obvious liquidity to target? High that's connected to the low, range low with, notice, relative equal lows. So the answer is yes. Did we go above the 8:30 and or 9:30 a.m. midnight opening price? There's the 8:30 a.m. open. We're above it at 9:30. Okay. Is there SMT divergence? Notice this high, lower high, higher high on yes prior to 9:30 a.m. Okay. Is there an entry model? On the 5-minute time frame, we do have an entry model here when we close below the bullish FVG here, confirming this as an IFVG. It shorts and distributes at 9:30 a.m. Okay, now let's look at this with 9:30 a.m.'s actual candle on a 1-minute chart. Okay. All of that framework in mind, we run out some stops prior to 9:30 here. Notice what does 9:30 do, right? We already closed below this IFVG here. 9:30 a.m. opens, trades higher, straight distribution, right? You can start catching these distributions now. Continuation after 8:30 a.m. manipulation, right? With London's range, okay? So here is London's range, right? This high to this low. Buy stops to sell stops, range high to low, relative equal lows as a drawn liquidity. Are we going to trade the New York AM session? Asia, and then London. It's not extremely overly extended, so yes. Is 9:30 a.m. likely to be manipulation or distribution? Okay, yes. Why? Because of this framework here. We're back in a premium also. From this low to this high, we're in a premium of the overall range we're working within. And we're also in a premium from this high to this low, right? So extremely deep in premium, right? There's that high. Okay, have we run stops prior to 9:30 a.m.? Obviously, yes, we did here. We run up the range high here in London. Is there obvious liquidity to target? Relative equal lows here, super obvious at 9:30. Okay. Did we go above the opening prices? Notice at 9:30 a.m. Okay, we are above the 8:30 a.m. opening price here. Okay, extremely high probability. Is there SMT divergence? Lower high on the Nasdaq, higher high on the S&P. So yes. Is there an entry model? Well, from this high to this low, this is a premium fair value gap. Swing low broken here. This in itself is a solid entry here. We're very close to the midnight as well, and we're above the 8:30 a.m. open. High probability to short before the open, right, and catch the distribution of the open, right? So that is how this 90-minute window can set you free. This questionnaire is so crucial, right? You want to print this, guys, and have this on your desk, okay? Because you want to answer these questions before you take a trade. All of this, okay, is in alignment with the LTP and ITP as well. When you have all of this aligning, guys, the probabilities are so high, okay? And you can really quit your job by focusing on this 90-minute window and catching either the manipulation or distribution.